Hey traders, this is Jeff from ZenTrader.ca, and I got lots of charts to go over. I want to start with gold and silver and show you how this is the strongest these markets have been from a relative strength indicator point of view. The RSI here, you can see this is just a daily with the Elder Impulse system chart view here, and you can see this is the strongest we've been since August of last year on gold and since May of last year on silver. And even though we're significantly lower than where we were, I think that what this RSI is signaling is that inflation is going to be ramping up, but I think this is the start of a larger move for silver and gold, and potentially a larger move down for the US dollar. I'm not saying that this is going to happen. I'm just saying the way the markets behaved this week with gold and silver moving up significantly, with the general markets moving higher, with the dollar moving down, this could be a common theme going forward. Essentially, I think the dollar's move is gonna be dictated with what the general markets are doing. And let me show you here the chart of the Nasdaq. This is a 60-minute. You can see a really clear pattern here since we got the timing signal change back in the end of December. Pop up, consolidate, and so on. And right now we're at the end of this consolidating move. And with the way these markets have been self-correcting as the move has been going, it feels like we're really overextended, especially for those of us who are more or less on the sidelines and watching the markets continue to go up and not be able to participate in some of this rally. I think it's frustrating for many, but I think we're in a stock picker's market. I think that if you're buying, we're in earnings season. If you pick up some stocks that are bumping up on due to earnings, buy them on a pullback. I think those kinds of stocks are going to do well. I think the markets going forward, and when I say markets, I mean like Dow, Nasdaq, S&P. I think we're in a self-correcting market where we're going to go up to sideways for a little bit. And I say that because right now, when I look at my timing signal, there's absolutely nothing negative about it. The only thing negative about it is that it feels like we're overbought. It felt like we were overbought a week and a half ago, and yet the markets continue to go higher. So what does that tell you? It tells you the strength begets strength, and that while I'm not saying jump into the market on the long side on Monday, I actually advise against that. I think that even though I'm saying we're probably going to continue higher, I don't think that that's a strategy to trade off of, because we're going to get some sort of a pullback. Yes, it's frustrating to sit there and wait as the markets continue, but I think that's the safest thing to do. Maybe dip your toes in on some individual stocks that you like, you like from a technical perspective or even a fundamental perspective. I think the markets are going to grind higher, but I'm saying that based on my signal and based that I have no warning signs other than the fact that I think I have it here. The 4-day EMA is above the counter channel, but when I look at the ADX, I guess I should have maybe pointed this out, that as long as this line's pointing up and as long as this green line is above it, the markets have a difficult time correcting. So I think the first sign that we should look for that the markets are really starting to lose some of their momentum is when this positive DI line crosses through this ADX. At that point in time, the markets kind of have the green light to correct. I think as long as it's above that, then we're going to grind higher, go sideways until we lose enough momentum. We are at an area on the Dow where we do seem to be running into some resistance, but it's kind of forming a diamond pattern if you want to imagine it. I didn't draw it, and I'm not going to make it to the Canadian chart, have too little time. But one nice thing, these volume pullbacks have been low on the Dow too.